Hello everyone, welcome back to my channel. So this video marks the beginning of week number 34 in this Road to 100k Realized Return Challenge. Uh, well, I'm still reeling from what just happened now with the markets, and I'm going to make a separate video to tell in detail the miraculous escape that just took place in our portfolio. But for the time being, and as things stand at the moment, the markets opened the week in a positive mood, and we followed up with our plan in which we basically sold the calls that we were supposed to sell on the QQQ, as you can see right here. So the trades, and these are still the trades from last week, so they don't matter. And yeah, this is it. So we basically sold 3 calls. We received this premium, so we received about $51 here. And then we also sold some, by the way, we chose this strike price 488 because this was about 2.4% relative to the price that was at the moment that was the spot stock price by the time the markets opened. And so basically we decided to go for this, not to go for the full 2.5 because the markets were already up, and so it was kind of unlikely that the prices would go up by more than 2.5%, given that they were already more or less 0.5, 0.6% up in pre-trading, in pre-market session. So I decided to go for the 488, but then it came the opportunity for us to sell or rather to buy back those calls at 1 cent, which we basically did. And then we sold another calls with a lower strike price 484 for 8 cents each, so we received 24 euros. But and for reasons that I will explain in another video, which I'm going to record right after this one, we basically bought back these same calls, and we had to bought it back at 6 cents. And so the gain that we had was a very tiny one. As you can see there, here is the trade, and we basically made $3 out of this trade, which is basically nothing. And yeah, annualized rate of return of 0.74%, which is absolutely marginal or meaningless. But yeah, basically we had to do this, but I will explain in another video, so be sure to check it out. When it comes to Pfizer, the price of the Pfizer shares were very slightly up before before the market opened, and it remained around that same price, so around 25.80, 25.82, 25.78, and we decided to simply sell our calls at 26.5, 26.50. Now keep in mind that our current average price is 26.36, so making the calculations, if we sell our 2,800 shares on Pfizer at this strike price, if these calls are assigned, we basically make a profit, a capital gain of around 400 euros, which is always nice. I would rather sell it higher, but yeah, this is what we have to work on. We managed to sell our calls at a price of 10 cents each, as you can see here, even though it took some time because we managed to sell these basically at the same time we posted the trade, so 3-4 minutes right after the market opened. But then the remaining ones we were only able to sell about an hour later. And why is that? Simply because the stock price went down and then came back up, and when the time the market by the time the market was down, these calls were selling at a lower price. But I decided to wait, not to lower this price, because I felt maybe, given the mood of the markets were up, but the Pfizer stock was on the opposite way, was trading down, was lowering price, and I felt that probably the price would catch up with the way that the most of the other stocks were doing, which was going up, and it did. And so we basically managed to sell these at 10 cents, which is always nice. And so, assuming that these calls either expire worthless, or they are a sign, which is our best case scenario, but regardless of that, we still be able to pocket a profit of around $260. If for some reason we see that the price comes down and we are able to rebuy those covered calls not too late in the week at 1 cent, we will do so, and then we just roll over and we sell the same call we will probably do that, sell the same call for the following week. It depends. We may also stand still, because as you can see, every time we trade these calls, we pay a lot of commission, which eats up our profits. And then if the stock comes down, the premium we will get is lower, and so when the stock price comes back, we could potentially, we are just having an opportunity cost, because the premiums go back up, and we are not able to capitalize on that because simply we already sold the call. So probably the best course of action is to wait until it matures, see what happens, and then if nothing happens, we will sell those calls again next week. But yeah, it all depends on how the market works. But keep in mind that every trade is going to be very, very costly in terms of commissions, because of the sheer amount of calls that we have to trade. But we'll have to wait and see what happens. For the time being, we'll continue with our strategy in terms of the QQQ. It is coming back, so yeah, basically it closed up 0.64%. It was trading more than 1% over the session, at some points over the session, and yeah, that almost became our downfall, but that will be explained in another video. For the time being, this is all. Feel free to leave your comments in the comment section below. Also, you can also DM on LinkedIn in case you have any questions. And also feel free to like the video and subscribe to the channel. And we will reconvene at the end of the week, on the weekend, to see how the rest of the trades played out. And yeah, I'll see you there.